All right, we're back with less than 30 minutes to go. Session lows. You just saw the graphic there. There's our wall where it is decidedly red, as you can see. The Dow right now is down just about 1%. That's the lows of the day, I said. S&P down 61 points. NASDAQ is still off better than 200 points. We should probably show you yields, too, if we can put those up, because that's been a considerable story today, following Jay Powell and the Fed chair, of course, and his comments yesterday. The roadmap ahead of where Fed members think all of this is going results in on your left green and on your right red. And that's the story. We'll track it with less than 30 to go. We're watching Apple today, too. That stock is in the red. The new iPhone 15 officially going on sale tomorrow. That after reportedly strong pre-orders comes at a time when shares are tracking for their worst month of the year. Joining us now, Morgan Stanley's Erik Woodring. He covers the stock for us. It's good to see you. So tomorrow's the big day. Reports are so far so good, maybe stronger than we thought. What's your read?
You know, Scott, it's tough to say this early. We're only, call it 5 days into the post-pre-order period. I would say relative to expectations, again, given what we know and the concerns about China, I would say these first data points have probably been better than expected. Again, lead times, by and large, for the iPhone 15 family are slightly longer than the iPhone 14 family at this point in the cycle. But as you know, there's a lot left to go. You could get a head fake early in the cycle. So what I would tell you today is demand is outstripping supply. There are some supply shortages, especially at the high end with the iPhone 15 Pro Max. But by and large, I think the data points thus far have been better than expected.
I just had the noted tech investor Glenn Kacher on with me a couple hours ago. He's got all the mega caps in his book, except for one. Apple, which he suggested was the one that stuck out like a sore thumb with its valuation relative to the rest, because in his words, the smartphone market is still weak. How do you counter that?
In the near term, I'm not sure I do counter that, Scott. Frankly, the smartphone market is weak. What I've said, Apple is here, call it $175. That's about 25 times my fiscal year 24 earnings. I'd like to see the stock kind of derate to the 160, 170 level before I come back on here and say, Scott, this is the time to get more aggressive, because we're at a period right now where there are risks. China is a risk to Apple. The Department of Justice investigation with Google, while Apple's not a part of it, inherently becomes a risk for Apple in the event there's an adverse scenario. And when you look at the 3 months Apple performance post an iPhone launch, Apple typically performs in line with the stock market. So we need to get past this period of elevated risks. Again, you talked about the 10-year earlier, the 10-year at 4.5%, another headwind. So I don't think that Apple today is a name that I need to come up here and be very vocal. Again, data points are better than expected, but I'd feel more comfortable to see a little bit more consolidation in the stock before, again, I pitched you more aggressively on Apple.
No, I so much appreciate your extraordinarily honest view on it, and I know our viewers do as well, but do you think 160 or about is a reasonable level to think the stock could trade down to?
So listen, this is a high-quality company. I think if we're looking forward and we say we're concerned about the world, I do think there's going to generally be a flock to higher-quality companies. We know that Apple and the iPhone is a staple in people's lives. They're not going to give it up. That doesn't necessarily mean they'll refresh this year, but it doesn't mean that the platform that we know that Apple has that is so powerful is gone, so to speak. And so I do think 160, that's about 23 times my earnings power. Again, a premium to the historical average. But I think Apple has shown how this platform has changed. And again, you're onboarding new users, 150 million new users last year that are now new Apple customers that Apple can go and monetize. I just think that's a very important tailwind for this company. And so we do have growth accelerating in fiscal 24. Call it high single-digit revenue growth, mid-teens EPS growth, 20% free cash flow growth. I'd argue at 23 times, that's actually relatively attractive. So, yes, I do think 160 is kind of where I'd come up here and tell you, Scott, let's get more aggressive.